August is usually the low for both the metals. I think that will be the case. I think you'll get into the fall, October, November, and you'll see silver and gold both start to reassert themselves. I think by the end of the year, you'll see new highs for this year, gold above 2,500, let's say, and silver in the 33 or so. And then 2025, I think we're going to see an acceleration year where silver could double. Gold, I don't know if it could double. It could. I mean, could is an easier word than would, but I think you'll see an acceleration.
David Morgan, the publisher of the Morgan Report, is known in the precious metal and resource sector for his extensive expertise and bullish stance on silver as an investment. He has been a prominent figure in the precious metals market for many years, advocating for the value and importance of silver. His bullish views on silver have earned him the nickname, the Great Silver Bull. While Morgan has always advised increasing your silver stacks over the past few years, he believes there is a greater reason to do it today than a few years ago. According to the Great Silver Bull, the global economy and financial system are heading for some very hard times, and investors will soon begin to return to trusted safe haven assets that have served the world for thousands of years through previous hard times. While Morgan is bullish on both gold and silver, predicting that both metals prices will pick up before the end of the year and accelerate significantly in 2025, he is more bullish on silver, which has always been the more volatile asset. In a recent interview with Ben Mumme, the Living Your Greatness podcast host, Morgan described silver as the second most useful commodity in the world, after oil, and the most useful mineral on the periodic table. This suggests that silver's current price is much lower than its actual value. But this is a tale almost as old as time. For decades, the silver market has been constantly manipulated, with prices perpetually suppressed by banks, hedge funds, and other big money investors through the paper markets. If the numerous reports are to be believed, the manipulation and suppression of silver prices go beyond these obvious suspects. Over the years, there have been whispers of heavy government involvement, particularly the US government and the highly controversial military-industrial complex. Yet, Morgan is calling for higher silver prices later this year and even higher prices in 2025. According to the Morgan Report publisher, the system that backs the manipulation of the gold and silver market is rapidly falling apart. A new era is underway, and this new era has chosen tangible assets like gold and silver over fiat money. We will present clips from Morgan's interview with Mumme. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support, and please enjoy the video.
The silver market is so undervalued relative to any other commodity, gold, the paper supply, oil, or anything you want to name. And it's the second most useful, it's the first most useful mineral on the periodic table. As far as oil really is an element, so I'll call commodities. It's the second most useful commodity. Oil is by far the most useful commodity. But in second place comes silver. So something that useful you'd think would be very valuable. But it's only valued highly when it's one aspect, and that's when it's money. And silver and gold are money. They track pretty much to the natural ratio, how they come out of the ground. So you get this, 20 to 1, 15 to 1, 10 to 1, 7 to 1, whatever that ratio is, seems to fit when they're only money. But since silver is a technological metal and needed so much in a society generally, let alone a high-tech society, it becomes less valuable in terms of its monetary aspect. So the idea is that will reassert, because people will realize not only is it needed for my cell phone and my flat screen TV and my microwave and my membrane keyboard, but I also need a store of value because the monetary system is disintegrating. And it's so cheap relative to gold or any other hard asset that it's something that I should really take part in. And I think once that consciousness is available to most people that have some savings to preserve, that it'll actually do something similar to what it did in 1980. And that is, it will just do this parabolic move where it starts to not only outperform gold, but almost anything else in a very short time frame. And that's what I'm looking for, is a spike in the silver price at some point in the future. And I don't think it's going to be that far away. The quote unquote problem this time, or the advantageous part to a silver investor, stacker, speculator, is that the dynamics are so in favor of silver this time that you're not going to have this huge amount of silver that comes to the fore like in 1980, where tea sets were smelted down and all that. That could happen, but the structural deficit as projected is greater than the amount of silver supply, with all above ground silver and all mining activity and all recycling. And let me explain. Going from this point forward, the amount of demand in silver for just industry eats up the total supply, recycling, and more, which means the above ground stockpile has to be eaten up. Now, there are variables there. One is that, maybe the amount of solar that's projected to be produced won't be produced at that level. But then again, maybe it'll be greater. We don't know. The amount of investment demand could cease, which is above the industrial supply anyway, but that's what will take the price far higher. Maybe people say, I don't know, I'm going to buy platinum. I don't want to buy silver. Very, very doubtful. So the projection is that we could get a spike, and yet where the equilibrium is could be a very high price, because the amount of demand for industry alone, let alone the people that still want to preserve their wealth by owning some silver, might not be that willing to sell it at a huge paper price or a huge capital gain. They might just be willing to hold on to it because it still is, relatively strong valuation, only projected to go further up in value over time, because the deficit continues through, you could say 10 or 20 years.
The narrative surrounding silver investment has undergone a significant transformation in recent years. Historically, silver was primarily valued as a monetary metal, akin to gold, with a rich history of use in currency and as a store of value. However, this perspective has shifted, and today, silver is largely regarded as an industrial metal integral to a wide array of applications in technology, electronics, and renewable energy. Many experts now draw comparisons between silver and copper, given their similar industrial utility, rather than viewing silver alongside gold. Morgan attributes the metal's underperformance to this evolving narrative. He argues that the current market perception overlooks the intrinsic value of silver as a dual-purpose metal. According to Morgan, silver's unique combination of monetary and industrial uses should be fully recognized to drive its true market potential. Furthermore, Morgan highlights the crucial role of institutional investors in this process. He believes that significant investment from large institutions would not only validate silver's value, but also create upward pressure on its price. Such movements could lead to a ripple effect, encouraging retail investors, who may be disheartened by stagnant prices, to re-enter the market. As institutional investments drive prices up, retail investors could see improved returns, potentially revitalizing the broader silver investment landscape. Fortunately, Morgan believes we are only one crisis away from this happening, and that crisis is much closer than many people believe. Let's get back to the video.
I think we're in the normal summer doldrums. You're going to see a trading range in the summer, probably for July, August, September. August is usually the low for both the metals. I think that will be the case. I think you'll get into the fall, October, November, and you'll see silver and gold both start to reassert themselves. I think by the end of the year, you'll see new highs for this year, gold above 2,500, let's say, and silver in the 33 or so. And then 2025, I think we're going to see an acceleration year where silver could double. Gold, I don't know if it could double. It could. I mean, could is an easier word than would, but I think you'll see an acceleration in 2025. And then depending on what happens, what the nation states come up with a new monetary system, if they propose one, if there's restrictions on capital flows between nation states, what happens with the war efforts, whether they subside or increase. There'll be a lot of factors that will determine what the precious metals do. But on balance, I think even in a calm environment, one no worse than we currently have, you'll still see a massive acceleration in the metals, because I think the real estate devastation that's taking place in commercial real estate in the United States hasn't worked its way through the system yet. And a lot of people that have basically counted on things to be status quo with their IRAs, their 401ks, the stock market in general, the real estate market, are in for a rude awakening, so to speak, and realizing that these things don't go up forever, and they do go up and down, and that there has to be some adjustments made in the monetary reality, and that this is going to hit home, and they're going to start asking themselves, well, where do I go? And the answer is one place you can go is precious metals arena. And as that starts to rein into the consciousness of people, not only in the United States, but on a global basis, you'll see a run to gold, I think, like you haven't never seen before.
What is one misconception about silver that you are dying right now to debunk?
Well, one is the ratio is 16-1 in the ground. It's not, it's 7-1. That's just a pet peeve of mine. But I think another one is, using silver as money, and people not understanding that, there's, an ounce of silver is about 25, what is it now? Near 30. And that's the average wage in America for the worker. I looked it up on Google. At least that's Google's answer. So an 8-hour day would be 8 ounces of silver. So 8 times 30 would be 240. Is that right? Anyway, the point being is you could pay everybody in silver for about 3 or 4 days, and then you've run out of silver to pay them. So that proves that the value couldn't be used at that level as a monetary system. Basically, it wouldn't have a high enough value. So you'd have to set the value differently to where an ounce was, say, 10 times as valuable. So instead of being $20, $30 an ounce, is $300 an ounce. In that case, then you could probably use it in the money supply. So it still has a monetary aspect, there's no doubt about it. But to be valued as a monetary asset, it's incorrect. To be valued as a commodity only, that's debatable. But a lot of these primary silver mines are mining about 20. So they're not making.
According to recent data from the Silver Institute, there remains a robust demand for silver from various industries. In contrast, investment demand is relatively low, aside from a steady interest from retail stackers. Morgan believes these dedicated stackers will persist in their investments because they recognize the true value of silver, especially in today's climate of rapidly depreciating fiat currencies. He points out that these investors are acutely aware of silver's enduring worth as both a monetary asset and a hedge against inflation. Morgan suggests that the patience of these retail stackers will soon be rewarded. The growing industrial demand for silver, driven by its essential role in technology, electronics, and renewable energy, is a significant factor that will propel price gains. Additionally, the increasing trend of diversifying investments away from gold into silver will add further upward pressure on prices. Morgan anticipates that these forthcoming price gains will be substantial enough to encourage more buying interest, particularly from investors who have been cautious or on the sidelines. This influx of new buyers, attracted by rising prices, will likely create a positive feedback loop. As prices climb, more investors will be drawn to silver, further amplifying the demand and continuing the upward momentum in the market. Morgan is optimistic that this scenario is not far off, and those who have held onto their silver investments will see significant returns. We'd love to hear your thoughts on Morgan's insights. Please share your comments below. If you enjoyed this video, don't forget to like, subscribe to our channel, and turn on post notifications for more updates. Your support helps us bring you more content like this. Thanks for watching.